What problems were you trying to originally solve when you founded Biz2Credit?
Credit for businesses is their lifeline and bloodline, and they need it all the time. Unlike consumer who will get a mortgage or credit card, then they are set. Businesses need capital all the time, especially debt capital.
Biz2Credit has funded billions of dollars in small businesses. What have those years of data taught you traditional lenders often miss?
Cash flow data is the most predictive data. Traditional lenders will look at their tax data, which is a past historical data for last 2 years, because if you see in this country, most of the business owners don't file their tax returns. Now, if they upload their bank statements and all that, we have AI and machine learning algos which can analyze everything in real time.
How geopolitical tensions and global events changing the way small businesses access capital?
Almost 70-75% of the tariffs in this country was paid by small and mid-sized businesses, not by large corporates. So I have clients who were not paying almost zero tariff, and they were forced to pay on every container tariffs up to like $28,000.
Many people still think lending is a transaction. How do you see Biz2Credit evolving over the next 5 to 10 years?
So, see,
Welcome back to True Power. I'm your host, and today we are sitting down with someone who has spent about 2 decades rethinking how small businesses get access to capital. Rohit Arora co-founded Biz2Credit in 2007, and since then has helped arrange over $8 billion in financing for entrepreneurs around the world. He later launched Biz2X, which now powers digital lending for banks and financial institutions globally. He has been named Entrepreneur of the Year by Crain's New York Business, and you've likely seen his insights on small business finance in the New York Times, Bloomberg, and the Wall Street Journal. Rohit, welcome to the show. How are you doing?
yeah, good morning, and thank you for inviting me for this show.
Thank you for taking the time out.
Yeah.
So I want to start with your journey of starting Biz2Credit. What made you make that decision? We'd like to a little bit understand more about your background. And I'm sure when you came to the States, you had a vision of how you wanted to build your career or the path forward of excelling in the field that you were in. So we just like to know a little bit more of background of building this business.
Yeah, so I came to US in 2003, always had an entrepreneurial bent of mind. And then living in New York, one thing, me and my brother, we figured out that there was a lot of this gap in the credit markets, even when the credit markets were doing so well prior to the 2008 crisis, especially on the business side of the things. And I used to work at Deloitte Consulting in the strategy practice at that point of time, and then got this idea, that if we start a digital platform where we can match up the business owners with funding options, initially. And when Steve Jobs came out with the first iPhone, that was like a aha moment that now people will have internet in their hands, because typically business owners don't have, they don't sit in front of a laptop or a computer. They're busy running around all day long. They are like very busy wearing multiple hats.
Yeah.
So we thought that, that could be a great idea. And like any other, entrepreneurial gig, we said, let's start something and then we'll figure out. So that's how it started, in late 2000.
Were you doing a job at that time? Because majority of people who migrate from India, they're starting their career in the corporate space.
So, I was a little different because I started my career, I grew up in India and then worked for a venture fund in Singapore, ran the first incubator for GIC, which is a sovereign fund. So my career path was a little different in that sense, because I always wanted to, be an entrepreneur. So even in my first job, it was more entrepreneurial than like a normal job. And while running that incubator, I also started a company there, raised close to $3-4 million in the pre-dot-com, boom bust era, $3 to $4 million. So that gave me a very good insights into, how to set up a business in the internet economy, how to raise capital, and working for that $300 to $350 million fund, also gave me that perspective. So coming to US, I was always very focused on creating an entrepreneurial gig. While I worked in corporate America for some time, but I was very clear that I want to go and set up something on my own.
That's wonderful. So that spark, that desire to build your own business and being an entrepreneur was existing in you. Did it come from the family background? Was your father an entrepreneur?
No, so my father was not an entrepreneur. He was in a government job for all his life, but most of the other extended family was entrepreneurial. So part of it was that, part of it was just like, controlling your own destiny. And as I joke, I came to America to make America great before Trump made it great again. But
Wonderful.
yeah, but like I think the idea around, I had a very strong conviction about things, growing up. And also when the internet came along, I could see that this is a paradigm shift in the way businesses will be done and handled. And I then planned it the right way, because in my view, entrepreneurship is also that something that you have to practice and learn. If you want to build a scaled business, you cannot, like, those stories look great of college dropouts and everything, but one, it happens very rarely. Secondly, it's also more a question of the timing piece. And then the third thing is that you have to be prepared, because being an entrepreneur is a marathon, it's not a sprint. So you will go through a lot of ups and downs. So obviously you need to be prepared, for that.
True. What problems were you trying to originally solve when you founded Biz2Credit?
So I think the biggest challenge that we saw in the market, especially in New York, was that there's so many small and mid-sized businesses here, and we initially thought that we are going to solve a problem for immigrant businesses. First generation entrepreneurs have come into this country, set up a business. They don't have a very strong banking relationship. At that point of time, a lot of them were not even exposed to technology much. So for them, even going online and trying to get or apply for funding online was a very new concept. And they were very skeptical, and they were right. The data availability was extremely patchy at that point of time. I think the things that we were trying to solve was threefold. We were saying that, okay, how do we create a online platform which, builds into all the big, say, touch points. So, and this I'm talking about pre-API era, pre-Fintech era. There was no word as Fintech. Was that, we could connect, like what are the businesses doing on a day-to-day basis. So we identified 4 or 5 big touch points: payroll, payments, marketing, filing taxes, kind of stuff. So we said, why don't we go and start building the connectivity with the players in US, which actually serve them, in that sense, and make their life easier. And the bet we took was that it will take some time for online adoption to come in and the data availability to come in. But once it comes in, then it can become a really large opportunity, for us as well as for financial institutions, business owners, and everybody else. And it will also solve a big pain point, because credit for businesses is their lifeline and bloodline.
Yeah.
And they need it all the time. Unlike consumer, they will, like, who will get a mortgage or a credit card, then they are set.
Yeah.
Businesses need capital all the time, especially debt capital. So we said, how do we go and solve that for that problem? How do we, create something which is extremely smart and efficient over time, that saves them a lot of time, money, and effort, and also lets the financial institutions reach out to them, in a more informed manner and also in a more productive way,
Looking back over nearly 2 decades, what has been the biggest turning point in Biz2Credit's journey?
So one is 2 decades, close to 2 decades. So that reminds me of my age now. Having said that, I think there are 2 or 3 big inflection points that we have seen. One is obviously after the 2008 great financial crisis, we saw the capital from traditional banks and lending institutions just dried up, especially in this space. And that hasn't fully come back even today, after that. We saw the rise of alternative channels of, financing, money coming in, and so that was the first inflection point we started seeing in 2011, 2012. The second inflection point really came, when the digital adoption started really picking up just before COVID and during COVID. That was a big paradigm shift, that happened, where most of the business owners who were not comfortable going digital went digital, and then they are more and more are going digital. So which is a great thing. And now I think the bigger change will come with AI, because if you have all the data, if you have all the things out there, you can actually go in and do a lot of wonderful stuff with that, in terms of whether customer onboarding experience, underwriting adjudications, portfolio monitoring, pricing, dealing with institutional investors, at the other end, because now this asset class has become pretty mainstream. So we see that, it started slow, it started small, and then it's going. But now it can become very large very quickly over next 2-3 years, and I foresee that's coming, already.
While you were building Biz2Credit for the last 2 decades, where internet was still relatively something that people were exploring and buying online or wanting to get money online from a credit union or a lending company was something that people didn't even experience or didn't even try to engage with. What were some of the bottlenecks that you had to overcome while building it? And could be psychological awareness to people, building more trust and credibility. So what was the theme there?
So when we started, the one or two big challenge was obviously people are not trusting online, channels at all. And secondly, there was lack of availability of data. So in US, unlike some of the other markets, open banking was not really prevalent, so people are not really, they were doing online banking per se, but they were not willing to do simple things like connect their bank accounts online, and that infrastructure was not there. So now what has changed over the years is that, even pre-COVID, we had like almost say 30% of our customers who used to come and used to connect their bank accounts digitally. Why I say that's important is because that gives us idea of their whole cash flow data. Like we can look back 6 months to 12 months of their cash flow data. We can run a lot of analytics on that. Now we can use AI, machine learning to do a lot of that stuff. And that also reduces massive amount of paperwork. The second thing it does is that it also gives us data on an ongoing basis, which helps them to get better priced products. And for us, it's more better portfolio monitoring, which makes our institutional investors also a lot more comfortable. So I think one of the things that we have seen is that obviously people have become, now internet has become default. Everybody goes online before they go offline. But that wasn't the case earlier. The second aspect has been, social media is playing a bigger and a bigger role. Like we are sitting today, podcast is all about social media, now. So people are consuming content which is more social media driven than anything else, which is good in a way because then you can reach out to more people, you can target them better. And the decline of traditional media and the rise of non-traditional media is part of that paradigm shift happening. And especially for a lot of immigrant, communities who never were watching mainstream TV, in America, for them, social media is one of the best ways to educate them, reach out to them, do things with them, which they traditionally wouldn't have done. I think the third aspect now is two things there. One is that as the asset class has become more mainstream, we have a lot of institutional investors, including insurance money, pension fund money, that is now getting invested in this space, which wasn't the case earlier. So that brings a lot of access to permanent capital. That brings a lot of access to, lower cost capital, which wasn't the case earlier. Earlier, the lower cost capital was only available through banks, not anybody else. And the third thing, which is now happening with AI, is that, things will get smarter, better, and also a lot cheaper to run the processes, do things. Now that also means that it'll be more scalable. And that also means that it will lead to, faster, outcomes and also more customized outcomes, that business owners need. Because credit is their bloodline and lifeline, but they also need a lot of hand-holding and help and, managing their business, doing other things because they are very busy people. So how do we now make things very customized for them? So we have like a whole platform known as Virtual CFO, which will help them to, look at their, not just their cash flow, but how they can benchmark their business against other businesses, where they're doing better, where they can get better with things, all that kind of stuff. Now, that couldn't have been done in a non-digital environment. But now with AI coming in, you can make it so much smarter, customized to their needs, which wasn't the case earlier.
This is actually a great opportunity because more and more people are getting laid off and they're realizing that they have to figure out a way to start their own business. So we're seeing hundreds and thousands of new entrepreneurs coming in AI's era. From a point of view of a layman who's just started their business and they aren't aware of what opportunities are there, what would you like to tell them step by step as a process, and what should they look into XYZ factors while they're deciding to go with a company like Biz2Credit?
So I think if you're an entrepreneur and you're looking for access to credit, obviously the thing that you have to look at is that for what reason you're borrowing money. Is it like a good example is if it is working capital, then short-term money works well, but you're looking to buy a piece of equipment or let's say if you're buying a real estate for your business, then it has to be more long-term capital. So As a business owner, you should be aware about your own asset liability matching, kind of stuff. Otherwise, your cash flow will get, disturbed. So I think that one thing is very important. The second piece out there is that, you need to also have a plan in place, that how you're going to grow your business, what are the new technology tools you're going to use, where you want to go. Because as an entrepreneur, growth is important, because if you don't grow, then you will not go anywhere, because competition will catch up with you, new things will happen. So it's always one big difference in a corporate job and being an entrepreneur is that in a corporate job, okay, you're a part of a machine, so you can keep doing that same stuff over and over again. As an entrepreneur, you will wear a lot of hats. You will be doing a lot of different things. So you have to be comfortable with that, but you also need to plan ahead. You have to see through the what I say, around the curve. You cannot get caught by surprise, because getting caught by surprise is the biggest pitfall you will ever have. Actually. So I think that's something very important. That you have to plan things. You have to then also figure out, do you have enough capital? If you don't have enough capital, then from where you will borrow. And I think one thing that a lot of business owners struggle for a long period of time is that how to set up your almost like your business credit. That's important.
Line of credit.
So once you set up your business credit, then borrowing money against business becomes easier. And you should try to do that as fast as possible, because otherwise all your business borrowing will still be tied to your personal credit, which is not good in the long term, actually.
This is a great piece of information for someone who's just starting out. What one thing fundamentally is relevant and most important element to succeed in the business is to set the foundation right. And as you said, with the AI tools coming up, there's more optimization. There are additional services that you can offer for them to succeed as well. Because one thing is, acquiring the credit and capital, and second thing is to actually make something happen from it, right?
Yeah.
So far, is Biz2Credit involved in any kind of functions or activities that are supporting entrepreneurs, or we're looking into building that aspect of it?
So obviously our core business is giving access to credit to businesses. Having said that, now we have so much of data and so much of experience. That's why we have, put together other tools around there, whether, virtual CFO kind of stuff, which is digital, then partnership with a lot of, local bodies across the country that can help businesses. We have partnership with over 7,000 plus CPA firms. We run something known as CPAloanportal.com. So 7,000 plus CPA firms on that. So while they can get access to credit for their client base, we can also offer to match them to the right CPAs for their accounting stuff, and that we do at no charge. So we don't charge you anything as a business owner, because our aim there is to make you more aware about your business, make you more credit worthy, and also help you to keep sustain and grow your business. We don't want you to get into trouble, on that side of the equation, because that doesn't help us also. So we do a lot of that. Then we have partnership with a lot of Fortune 500 companies like MasterCards of the world and Paychecks and other companies where, we can help you with a lot of the education piece, and if you're looking to, get some payroll advice or some, insurance advice and all that. So we have a lot of that, stuff. Ecosystem now. And we are deepening it now very quickly, So for a very long time, we were very focused on scaling up the business on the credit side now, which is happening at a rapid pace. So we are adding a lot of these new elements on the ecosystem side of the business now.
That'll be very supportive to the new entrepreneurs.
Yeah.
How have higher interest rates and changing access to capital changed the way entrepreneurs build and grow businesses now? And what are the shifts that you're seeing in the market?
So what happened after the COVID was that with higher inflation, interest rates went up significantly, because obviously during COVID, interest rates were at historical low, close to 0%. That will obviously unnatural in a way also. So what that has done is that unlike mortgages where, you can get a lot of fixed rate mortgages and you can lock it in for 5-10 years, business lending is mostly variable, cost lending. So even a good example is that even if you go and borrow an SBA loan, which is a government guarantee program, there the interest rate is also variable. So it changes even on your existing loans. So what happened when interest rates went up significantly higher was that even on the existing loans, borrowers have been paying on an average between 400 to 500 bips extra, which is a very significant jump. Because if you see if a loan is like $1 million or $1.5 million, then on an average you're paying an extra $50,000-$60,000 a year extra, which is significant amount of money. So what that did, that obviously impacted the cash flow of businesses. That combined with higher inflation, that meant that the businesses had more cost pressure, wage pressure, everything for their workers. So that clearly impacted their competitiveness, to a certain extent. And in US, interest rates have not been so high in the last 40 years. So people were used to low interest rate environment all the time. So that led to, I would say, some issues around businesses having to rejig. But what a lot of businesses have done is that, they're very resilient. That's what I've seen. Their entrepreneurs are very resilient people. They know how to pivot, how to do things. I think where they have got better is using technology. They have increased their productivity quite a lot. I've seen that. They do more with less now. They have become smarter. They're trying new tools in everything, marketing to everything else, out there. And the other thing is that, what they are trying to also do is trying to see what are the new growth opportunities. So we see a lot of like we have a lot of restaurant owner clients now who are trying to use AI to, develop their menus now. They are trying to figure out, what kind of customers they are getting, how to retain them better, how to build their databases with them. And because traditionally they have been very dependent on third-party online platforms, which take almost say 30% of the top line proceeds. So they are also trying to do, and I think where a lot of small businesses have gotten really good is using social media. Instagram is a great example of how many small businesses now use it to promote their own businesses. Yeah. That has made them bigger and better, and also more cost-effective marketing, and reach is massive. And the other thing that has also helped them is that, as people go more and more, like people have gone online already, but as search also becomes more AI driven, so a lot of businesses are starting to use that, because Google AdWords and all that had become extremely expensive in the past. So now a lot of them can take advantage of that organic, search starting to come back. Yeah. If they have better content, more interesting, engaging, things to do online.
True. And this also relates to the geopolitical tensions and the trade disputes and all the situation with the war and in multiple parts of the world that has also shifted the economy. How are these global events changing the way small businesses access capital and plan for their growth?
So what happened when Trump administration 2 came back, while it's a very business friendly administration, one thing that, or two things that have impacted businesses a lot was the imposition of tariffs. So a lot of studies have shown that almost 70-75% of the tariffs in this country was paid by small and mid-sized businesses, not by large corporates. Because what they do is the large corporates actually take a lot of their supply chain is managed by their vendors who are SMBs. So SMBs were the one who were like importing goods into the country, not the large corporates. So they were the one who were paying a lot of that, tariff. Well, obviously some part of it was transferred over to large corporates and consumers, but it wasn't fully transferred. The biggest issue and the challenge in that was that there was a lot of upfront deployment of money. So I have clients who were not paying almost zero tariff, and they were forced to pay on every container tariffs up to like $28,000, which is a large amount of money. So that impacted them quite a bit, their cash flow, and obviously money got stuck. They needed to borrow more money to just, pay more tariffs upfront. And obviously by the time they realized some part of it from their customers, it was a long period of time. That really impacted a lot of businesses. Good news is that is gone. A lot of tariff refund is also coming. So that will help, because the Supreme Court judgment was very clear that not only can you not charge tariffs going forward, but you also have to refund what was charged. So obviously that's a tailwind. So our data shows that there'll be around 170 billion plus of tariff refund that is happening over the next 6 to 9 months. So that should be helpful. The second challenge for a lot of SMB businesses was the whole immigration situation, because once ICE started cracking in on illegal migrants, a lot of legal migrants at the lower strata, while they were workers in these small businesses or consumers, they also got massively impacted because of that, especially in certain parts of the country. And that has not helped the demand piece also. So, and the third piece obviously is that inflation has still been high. And with the Iran war, gas prices went up quite significantly. they're back down, but in the last few days, again, things are going in the reverse direction. So that again impacted a lot of, businesses. So I would say overall, last 2 years have been, like there has been a lot of uncertainty. One good thing has been a lot more deregulation. So that has really helped businesses. The cost of doing business, cost of compliance, cost of everything else has gone down significantly. But some of these costs have really not helped the businesses.
I mean, the aspect that you mentioned before, that entrepreneurs being resilient and moving through different phases of their growth while there's the economical situations shifting because of geopolitical events, or for that matter, a natural calamity, or situation like COVID. So support for the growth of the businesses becomes even more of paramount importance, as you mentioned that you're also pivoting into adding services or optimizing for the success of the businesses that automatically would want people to get more money, to get more capital, so that they want to grow and scale the businesses. So I want to move to building the future of the finance. Biz2Credit has funded billions of dollars in small businesses. And what have those years of data taught you that traditional lenders often miss?
So I think there are 2 or 3 things. One obviously is that we have access to a lot of their cash flow data. So traditional lenders were looking, and even today they look at their text data, which is a past historical data for last 2 years. Because if you see in this country, most of the business owners don't file their tax returns till 6 to 9 months after whatever financial year they end it at. So that already is like 6 to 9 months of dated data. By the time the lenders are going to look at it, what we have found out is cash flow data is the most predictive data. That's why we help them to either connect their bank accounts directly, or now if they upload their bank statements and all that, we have AI and machine learning algos which can analyze everything in real time, can help them also to benchmark their businesses and everything else. So the idea around that is that you can actually do a lot of that stuff very quickly, and that cash flow data is extremely important. The second thing we have seen is that how are they using their money, because a lot of time once the lending has happened, that's why if we can see in their bank accounts how they are spending that money, what they are doing with that, becomes very important overall, in the overall scheme of things. Because if they are putting the money for productive uses, then it's great. But if they're not putting it in productive uses, then it can lead to higher defaults and everything else. And I think the third thing is helping them to benchmark their own businesses against other businesses in their industry, in their region, and they can learn from that, what others are doing better than them, and how they can improve their businesses. That also includes how to become, better in their cost optimization, as well as digital marketing and any other third services that they're using, how they can get the best offering on those also.
Makes sense. And many people still think lending is a transaction. How do you see Biz2Credit evolving over the next 5 to 10 years?
So see, lending as a transaction, yes, that's true, but lending has a lot of stickiness also. So in our ecosystem, we see a large number of our borrowers are now repeat borrowers, so they come, they will either take other products or they will renew their existing, financing. Because as I said initially, in businesses, you need money all the time. It's not like one-off kind of stuff. So we see now more and more of it as a, where they will do their transactions, but they can also build their credit history and their relationship. In the old days, what used to happen was this relationship was all relationship manager driven or branch driven kind of stuff. Yeah. So that has gone away. Now it's all digital. So like you have to adjust yourself. One thing I see more and more happening as AI agents evolve and everything is that they could even have that relationship manager who could be an AI agent, down the line. So somebody who can understand, who have the empathy, who have the intelligence to figure out that, what these business owners are looking for or what they need or how they can get better. Those AI agents could also become their advisors, actually down the line. And that will help them quite a lot, in my view, to, get better.
Stages where you are thinking that you may need, let's say, $50,000 of funding. But when you have a conversation with the relationship manager, you figure out maybe you need $10,000 more because this business requires that kind of funding for it to get to the next level of growth. So that initial consultation is it very important part of
That is important, but the other also important part is that what are you doing with that money? Where are you putting that? How you are putting it in productive areas, where you can get better. So a good example is that, if you have let's imagine a AI agent as your relationship manager who can go through your books, your financials, can help you to optimize that, say, oh, you're paying more to some of these third party providers. We see in some other businesses, they're paying less, or you can get more value added services or products out of it, actually. So that kind of stuff. The second thing is also helping them to build more predictiveness into their business, that when they really need the money. A lot of businesses are seasonal by nature, So when do they, because a lot of time they're scampering for money when at the last minute. And that's not the best time. They should be doing it much earlier in the cycle. How do you plan for that? How do you keep your, your financials, fully kosher? Simple things like matching your account payable to account receivables, because otherwise if you have negative balance in your account, you're paying overdraft fees to banks. That also doesn't look good on your business cash flow. So simple things like that, actually.
Biz2Credit lends directly to the small businesses, whereas Biz2X puts your technology inside banks and financial institutions. So what made you build both, and how does one make the other stronger?
So we really started Biz2X in 2017, 2018, when we were getting a lot of inquiries from traditional lenders, because that was the time when a lot of them started thinking about going digital in this space. And the challenge for most of the banks has been that, in a non-digital environment, trying to do loans below $1 million is very expensive. So they were saying that, okay, if I have to go digital, then I can lower my cost, and also I can offer, smaller loans than $1 million. And so we started Biz2X almost like how AWS came within Amazon. So like we did for ourselves. We had built the platforms, we had the data, we had the technology, we had our IP on that and everything else. So we said, why don't we go and as banks were coming to us, because we were not trying to offer every product on our platform, also on our own. And when I say on our own, also, we don't take most of that stuff on our balance sheet. We still have institutional investors, but like say bank products, we were not offering it at that point of time. So we said it will be good for our customer base also in Biz2Credit, because then they get one seamless experience, and banks also get enabled digitally, which will be helpful. I think now what we are seeing is something very interesting. So we initially started with banks. On that side, we have close to 35 banks in the country who now use our platform. We started with that, but now we have seen a lot of opportunity in embedded finance. So we have now partnered with a lot of large insurance companies, payroll companies, payment companies, in this space.
Okay.
And we are starting to do a lot of work in the space where, you as a business owner are, buying an insurance product or you're running your payment processing and everything. Now I can be sitting there literally, and with the customer permission can get access to all that data, which is non-bank data, do all the analytics, run everything, and then can offer you credit products then and there itself. So that is another very valid or a big use case that we have built in Biz2X now. That's growing very quick. And that also helps in our Biz2Credit business, because the more touch points we have with businesses, the more underlying data we have, the more we can, do not just the lending piece, obviously that's core, but other things that I had, mentioned earlier. And that also helps business owners, because now they're not even have to go online and apply for any lending. They could be running their payment processing business, they could be running their normal, payroll stuff and everything. And then and there itself, you can get that access to credit, built in. So what Biz2X has done is that really helped us to, increase our overall total addressable market, what we call TAM. That has also helped us to put tentacles in more places. Okay. So more data is there. And now with AI coming, it's going to get even more powerful.
Banks used to look as fintech as a competition. So how are they adopting it, or what is something, where do they see the value? You mentioned about the cost efficiency. Is there anything else?
Yeah. So I think a lot of banks have now realized that, they will also have to go fully digital, and they cannot do it themselves, because they don't have the expertise or the technology folks in-house to help them. So that's why partnering with fintechs makes a lot of sense, for them to scale up their businesses. And see, banks have their own role, fintechs have their own role. I still feel like, banks are not going away. But what's happening is that in this country, banks are getting consolidated. So there'll be less number of banks. We have like close to 4,000 banks. So those are getting consolidated because a lot of those banks are very subscale today, both in operations and by nature. So that's going to happen. The second thing that's going to also happen is that most of the customers want a digital experience. Now they don't want an experience of just walking into a bank branch and not experiencing it digitally. So that's becoming key, for a lot of businesses and for the banks also. And the third thing, as I said, the whole embedded finance piece is going to just transform the way people look at, these various touch points, And then the fourth piece is, a lot of private credit money is now coming into this space, which wasn't the case earlier. So earlier banks used to have all the capital to go and lend. Now that piece is getting totally changed very quickly. It's not just banks anymore. So that's why banks also have to get more cost efficient, process efficient, and also more customer friendly in a way. Because they were taking in all the deposits. They will still keep taking in the deposits because that's where, they have the regulatory moat. But the issue is going to be that how they deploy their deposits, because they only make money when they lend. They don't make money when they take money in.
Makes sense.
So I think that's a paradigm shift we are starting to see. US has been a little behind the curve on the digital bank side, but now we can see the speed at which it's coming. So more of that is going to happen, and more scaled institutional businesses will get in the digital space now.
What other markets are you penetrating except, you built in the US because Biz2Credit and Biz2X is global market. So are you favoring other markets too?
So we recently expanded into Middle East and also in India. There we only offer our Biz2X offering. So we don't do any lending, but we offer our platform again to banks, payment companies, large aggregators, and even sovereigns now. So that we are seeing pretty good growth because obviously digital adoption in some of the other emerging markets is higher than US right now even today. And there's a lot more openness about, investing in digital and now in AI, so because AI sits on top of all of the digital stuff. So the idea now is that, we are starting to put together is that, okay, what should we be doing to create something which is more global in nature? Because again, 70 to 75% of trade flows globally is handled by SMBs, actually. So that is another opportunity that we are seeing, that if we have platforms in some of these economies, then how we can also help them to gel together.
That's wonderful. And we're all here to see Biz2X and growing in a global space and helping more and more banks and financial institutions getting digitized and use more of AI resources. I'm going to go to the last segment, which is our leadership and legacy. I want to know your beliefs around imparting the leadership within the organizations, and what have you been seeing in other organizations of your size or bigger or smaller that needs to be shifted, that needs to be changed in order for them to grow faster and scale and obviously build that cohesive atmosphere and sense of belongingness?
So I think from a leadership aspect, what I feel is two or three things. One, as a leader, you have to lead by example and you have to lead from the front. You cannot be especially in this day and era, you cannot be a back room kind of a leader. You cannot expect your people to work hard if you're not working hard. First of all, you cannot expect them to be, doing things if you don't want to do it yourself. And as a leader, you have to be available, accountable all the time. That's what life is all about. You cannot have your choices, in that sense. So I think that one thing is very important because there are bigger opportunities in the world, but also more intensifying competition. So if you're not charging hard and you're not trying to build a large business, then you're not being fair to a lot of your co-workers. You're not letting them grow. So that's what my view on leadership is. The second piece is that anticipation. I think that's very important, looking beyond the curves, because the world is becoming very different than what it was in the last 40 years. We were in the most benign period in the world. Now, we are in a very interesting phase where there's a lot of AI going to come, but a lot of disruption is coming. But that's combined with a lot of geopolitical, issues we are starting to see. And the world is splintering away, So we'll have a China plus standard and a US plus standard. Now, that wasn't the case in the last 40 years. It used to be all US plus kind of stuff only. So I think a lot of businesses will have to adapt to that. That means there'll be higher cost than what we have seen in the last 40 years. Interest rates or inflation coming back to less than 2% will be tough. and challenging on a consistent basis till the supply chains get resettled. And I think the other thing is that, the competition is now global. Opportunity is global, but competition is also global. So I think that's where, as a business owner or a founder, you have to be, and as a leader, you have to set that example, that, okay, how things can be done, how they can be managed, what are the other things you have to do. And I think then it's all about, as the environment becomes more uncertain and fast moving, how do you keep your people focused, motivated, and also, and in this day and era when job losses are increasing, and in my view, because of AI, what manufacturing outsourcing did to US in blue collar jobs, AI is going to do it in the white collar jobs, and it's already happening, and it's going to get even bigger in play. So that's where I think a lot of that, disruption is going to happen, and pain is coming. So how do you, help your people to overcome that pain, and how to make them more efficient, better, and give them more opportunities? Because it might not be everybody can work for you down the line, but at least people who are working or who are not even working for you anymore, they have the right skill sets, to go and do something. I think that's the most important thing. I think the economy will need a lot of reskilling and upskilling again. And that's where I think as a leader, you have to be very, very, very smart about it. How
you have to be more proactive.
You have to be more proactive.
So how do you manage work and play? How do you balance it for yourself?
The issue sometimes is that, you cannot have a balance. You cannot, so the way you do it is that when you have to do stuff, you have to do it, and you have to make it happen, actually. But then there are ways to do it. Like a recent example is obviously the FIFA World Cup, where I've tried to, like combine it. Like I've invited clients, but I've taken my family also, to some of these matches, and trying to make it like more of a, like a fun kind of stuff, which is like good in a way, because that helps you to, do both things together, which obviously doesn't happen that often, actually. Yes, as an entrepreneur, living a balanced life is not for entrepreneurs, that's very clear, because you have too many things to do. You have to fight a lot of fires every day. You have to do a lot of long-term, short-term stuff, actually. So I think you need to get used to it, and you need to get smarter with your time and the things you do in, at work or at home, so that I think is very important.
What legacy do you hope to leave through Biz2Credit and Biz2X and all that you're building, or in fact putting your time and energy in pursuing this vision? What is that vision at the macro level?
So the vision at the macro level is 2 or 3-fold. One obviously is that, we are very hungry to grow the business, make it global. Me and my brother being co-founders, we see a lot of opportunity right now. So we want to build a large, business, and when I say large business, it's like 100, 200 billion plus kind of valuation kind of stuff. So I think that is important, in a way. I think the second piece is that one thing I like about this business is that we see very tangible benefits when we help businesses, so like every year we bring out a woman entrepreneur, report. So we see a lot of women entrepreneurs, getting smarter, better, other folks also, same way. So I think that is fulfilling in a way, because when businesses get money and then they're able to deploy it the right way, grow their businesses, improve their lifestyles, livelihoods, so that is actually good, in a way. And that is also a good thing, because obviously we are in business for profit, but you're also doing a lot of social good with that profit. So it's not just profit only, because long-term businesses are not sustainable if they're just out there to make money. It has to be a bigger mission than making money. Making money is important, but it has to be a bigger mission than that. And I think the third thing is that what we want to do is go into some of the other bigger markets down the line. And because this is a global opportunity, global problem. Every year we bring out a report, Biz2X and BCG, and what we have estimated, this is almost like a $7 trillion credit gap globally, which is huge, actually, which is bigger than most of the economies in the world. So that is something that we see an opportunity, and obviously as I said, with the advent of AI, new technologies, we feel very excited, because cost of building stuff, cost of doing business, cost of offering these products, tools, and services is going to go down dramatically over time, and also make it much smarter. And also, as the corporate world becomes less secure, we'll see more entrepreneurship is going to happen.
Exactly.
So we see a lot of growth in the pool of customers that we'll have over time. So that's happening. And then at the other end, a lot of the institutional money, because as people live longer and other things happen, so there's going to be more money with the pension funds and the insurance companies, and they need to also get better returns on that because, now they have to plan for a longer, payout periods. So that is another investable pool of money, which is now getting more mainstream in the lending space, especially in this space. So that's going to get better.
Very interesting.
Yeah.
Thank you for sharing that. My last question is about true power, because the name of the podcast is True Power. How would you define that in your life? How did it manifest for you? How did you use your true power to build a life of growth and fulfillment for yourself?
So I think for me personally, true power is something then when you have that, flexibility of doing things, and not being very like, worried about paycheck to paycheck, because that gives you a lot of freedom, doing that. And also ability to make things happen, which, as I said earlier, it helps you to change the world, it helps you to go with some greater thing, out there. Because in my view, you build legacy by building companies, not by selling them, actually. So that's an important piece. And then how many people you touch, by doing that, if you are touching a large number of people, helping them to get better in their lives and everything else. So I think that is a part of the true power in a way, because you are obviously, everybody has to earn money, everybody has to have a livelihood, kind of stuff. But at the same point of time, if you're making a bigger social impact, a bigger policy impact out there, that is equally important, from that. And that gives you that true power.
It's wonderful. Thank you so much for sharing this all. I personally learned a lot of stuff today. And I can see that when Biz2Credit, when Biz2X becomes like $100 billion group, or even more than that, there's going to be larger social impact, probably better policy changes, and also supporting more and more entrepreneurs, not only just access to the capital, but also the resources that are going to help them build a great scalable business.
I know. In this day of AI, 100 billion is just the starting point. It's now trillion, or plus.
Trillion.
Okay.
So yeah, thank you so much for joining us today. And it was a wonderful experience of learning from you. And I'm sure a lot of our viewers and listeners who are watching or seeing this podcast are going to take the maximum advantage. And before you go, where should people go to start looking for the resources or more information about Biz2Credit?
So I think they can go online on biz2credit.com, and they can always send an email at info@biz2credit.com, if they want, because all info@biz2credit emails come to me also, so if anybody wants to do that. So I think the idea around that is that absolutely you go and check out all our resources, even if you're not looking for credit. We have a lot of resources around knowledge center and everything else, a lot of webinars we do now and other things, So I think the idea around that is that we are genuinely very interested to help businesses to thrive and grow, and whether they get or they want credit or not is one part, but the more educated they are, the more aware they are, the better it for the overall economy also.
That is absolutely amazing. Thank you so much for joining us today.
Then, yeah, thank you for the invitation.